Welcome to another episode of Heartland Market Talk on the Open Range. Well, the economic data we had this week, the PPI on Tuesday, CPI yesterday, helped the crude oil market stabilize along with yesterday's Department of Energy numbers showing a draw on crude oil as the refineries are now coming off of maintenance and we're going into full production. That had allowed oil prices to stabilize after spiking at one point on Wednesday. We got down to under $77 a barrel on the spot contract. Now we're back leveled off above $79. Seems like this $78 to $80 range is where the market is kind of hanging into. But we do know one thing. Our top for the oil price for the spring rally seemed to have occurred back in April during the intensity of the Middle East issues between Hamas and Iran with fighting with Israel. Nothing broke out that caused production to subside. And so that run up to $87 a barrel seemed to be our high water mark. And so for the meantime, energy prices, gasoline at the pump is sliding. And this is not normal. We're going to probably see energy prices slide into Memorial Day weekend on the gas pumps. Now, as far as the soybean market is concerned, we found stability at the $12 mark. We have a rising crush. They're crushing the beans for soybean meal and soybean oil. Many thought soybean oil was the product we're going for, but it is meal, as our exports have been strong during the Argentine drought. Argentina pretty much processes all their beans and they sell the oil and the meal without selling the whole bean. When you crush soybeans, you get about 80% meal, 19% oil, and then 1% is lost in the whole mix of things as it's crushed. And so our exports of meal have been decent, and the need for it has helped out soybean prices stabilizing here as of late. Now the wheat market has been pretty much tied this rally to the frost in May for Russia. That has definitely damaged a lot of the crop there. Some crop is so far gone, they're going to replant the winter wheat into spring wheat, which guarantees a likely 20% reduction in production because winter wheat produces way more than spring wheat. So just saying that the replanting says there is a loss of wheat production. Many are now dialing down that wheat crop that was anticipated to be in the 91 to 92 million metric ton level. We're down to about 85 million metric tons. And that's why the wheat market has rallied. And as the drought continues to grab hold of Russia, there's a chance of rain about 5 to 10 days out. If that rain doesn't materialize, then wheat prices can move counter-seasonal higher into June. Typically, as the harvest gets underway in North Texas, moves its way into southwest Kansas, wheat prices suffer. Well, that could be the case here, but there are years when Russia has trouble, our wheat prices rally into harvest. We'll see if it's a repeat. Now it's time to go into Heartland Insights. Now we are going to talk about vegetative health over in Russia, and this is for May 8th through May 15th. And as you can see, this is the area where the Russian wheat is struggling, and it's been droughty. You see all the red in here? This is when you're below, worse than normal, and this creates this situation where this production is at risk. Now, of course, this is the Black Sea, which means here is Ukraine. So let's take a look at what Ukraine's doing. This is the vegetative health of Ukraine in the Donbas region. Look at all the red dots you're seeing. The crop is hurting in these areas. And so when you freeze it, and now temperatures have soared into the back to the 70s and 80 degree level, it doesn't help. Now there is some hope in the longer term weather models out through Sunday, May 26th. There is some hope of rain coming into these dry areas. This includes Russia and Ukraine in this area, but outer areas of central Russia continue to go dry. And that's part of the reason for this main spike that we've seen in the wheat trade as of late. Now, corn struggling with getting planted. Note the Midwest, they've had rain. Now, this goes out through Sunday, May 26th as well. Keep in mind the blue here is an inch and 3/4. This is through Illinois, Indiana, and Ohio, but it's Minnesota, northwest Iowa, a lot of rain holding up, even in Wisconsin. It's going to cause this to give us a planting progress that's not ideal. It doesn't mean a guaranteed loss in production. It just puts a lot of production at risk for when we get towards the hotter time of the year when we go into pollination. Now, taking a look at the charts, this is the wheat rally, mostly on the backs of Russian wheat, and that's what has caused this spike. Every time we seem to run up, we get a spike, we get a 2-day break, just like cocoa, spike, 2-day break, another spike, and a 2-day break. So tomorrow really is the charm we got to see. In Chicago wheat, we call this technical Fibonacci retracement. We made it all the way to the 62% retracement of last summer's high to the low made back in March. Tagged it here early in the week, and now again here is our 2-day correction. So whether this is a 5-wave advance off of the lows that is now completed and we decline into the summer harvest, that's yet to be known, because there are years past when this Russian crop suffers into the month of June. we could get another burst higher in prices and maybe anticipate something on the Chicago contract well north of $7, which puts Kansas close to $8 and Minneapolis well into the upper $7 range. This is Minneapolis week continuation. Again, moving average resistance, working to stop this market. We need new news coming out of Russia to get this thing to push higher, and that is missing those rains that they're trying to bring in about 5 to 7 days. They don't get that rain, then the wheat trade continues in advance that had got underway in April. Now, corn also feeling the pressure of constant selling from farmers. We've seen this price spike. Typically, we see it happen in 5 waves, 1, 2, 3, 4, and then possibly 5 waves to complete a 3 that we call this in technical trading. The major moving average support challenged in corn today. Again, if this rain proves to be troublesome next week, we'll get another push higher on this corn, and possible $5 new crop corn could be seen for hedging prospects. And of course, like always, we get these burst, 2-day correction, burst, 2-day correction. Are we going to get another burst? We'll see tomorrow. Soybeans stabilizing comfortably above $12. Our crush has been very helpful. South American soybean production seems to be off, and we're seeing premiums down there drag our values higher, allowing for the prospects of maybe another push up into the end of May. Crude oil holding major critical trendline support to try to maintain momentum, but it appears crude oil is tired. There's also a downtrend line we can put off of the highs. So crude oil is in nowhere land here, $78 to $80, probably containing here now for the time being. And now it's time for the question of the day. Just to remind our viewers, if you have any question about commodity trading or stock market trading terminology, we're here to help. And you can send those questions to info@heartlandinvest.com. We had a viewer ask, I hear there's a closing price and a settlement price. What's the difference, or is it just the same? Well, there is a difference, and they each serve a function. When it comes to the closing price is the last trade that originated on that day's activity that the computers read for the next day. Now, settlement price typically comes just before the last trading price, and it's where the statements are based off of. We call it the settlement price, and it typically occurs inside of a range of time, like 1 minute or 2 minutes, and it's the average of that price that's taken into account, and that's the settlement price that goes in the statement and what your profit and loss is based on that day. And so there's a lot of arguments occurring during a settlement price because of the financial implications when you have thousands of contracts on. Again, if you have any questions, email us at info@heartlandinvest.com. We'd be glad to help you out. Remember, you can always call us at 701-222-0221 or visit us online at heartlandinvest.com. While you're there, don't forget to check out our Heartland Market Talk podcast and sign up for our daily newsletter. And for producers, remember, we offer crop and LRP insurance as well.